the fact that commodities that are out of favor are the commodities that you buy. One really, truly hated commodity right now, one that's disappointed investors for at least 3 years, is silver. So I'm starting to look for silver stocks. I like them when nobody else loves them. I continue to be attracted to precious metals because I believe that the policy response to an economic malaise is highly inflationary. I see government deficits everywhere, even as I see it being more difficult to service those deficits with higher interest rates. I think the way around the political promises that have been made is to inflate away the net present value of the government's obligations, which is to say inflation.
Legendary investor, speculator, and founder of Sprott Global Resource Investments, Rick Rule, says he's going all in on silver, which he describes as a most truly hated commodity that has disappointed investors for years. According to the renowned commodity investor and speculator, one of the most basic rules of investing is buying when sentiments are at their lowest and selling when they are at their highest. One would not be mistaken to say sentiments about silver are at their lowest point at the moment. When compared to other metals, like gold for instance, silver's performance over the past years has not been particularly impressive. For example, earlier this year, when investors were rushing towards safe haven assets during the U.S. banking sector crisis, gold climbed from $1,835 to $2,018, while silver rose from $21.27 to $25.54. Though silver gained around 20%, while gold gained about half of that, investors were quick to notice that while gold was close to all-time highs, silver was still very far off. This has set the mood around investing in the cheaper metal all year long. Investors are wary of further short-term declines, fewer significant gains, and the unthinkable possibility that silver will forever stay manipulated and low in price. But these concerns are unnecessary, says Rick Rule, who believes that instead of being wary, this is the perfect time to be investing in silver. During a recent interview with Commodity Culture, Rick gives his outlook on the U.S. economy and markets, more specifically, the commodity markets. According to the renowned investor, during moments of extreme chaos, instability, and uncertainty such as this, safe haven assets are typically the most popular choices for investors, not just in the United States, but all over the world. As a result, Rick is certain that commodity prices are really about to take off, and silver will be one of the metals that will benefit the most. We will now bring you clips from Rick's interview. Ensure you watch the video to the end so you don't miss any of the golden investment advice the legendary investor gives. Lastly, don't forget to share and like the video and subscribe to the channel for more commodity-related videos. Thanks and enjoy.
So, what are your overall thoughts on commodities here? Where are you currently looking for value in the commodity space? And perhaps more importantly, where are you exercising caution?
I'm not exercising caution. I'm attempting to place capital. I note that the last time we visited, we spent a substantial time talking about uranium. And I said that we would pass into uranium bull market when the pace of Japanese restarts accelerated. That happened, and we're in a uranium bull market. Uranium is outperforming other commodities. I would use this not so much as an I told you so, but rather to reacquaint your audience with the fact that commodities that are out of favor are the commodities that you buy. One really, truly hated commodity right now, one that's disappointed investors for at least 3 years, is silver. So I'm starting to look for silver stocks. I like them when nobody else loves them. That isn't to say that you exit the uranium stocks yet. I think that uranium has at least a year to go in a bull market. If you're there, be right, sit tight. If you're not there, if you're coming into the space, you need to exercise some caution now. It's not a no-brainer, like it was the last time you and I talked. As to the broader question around commodities, I continue to be attracted to precious metals because I believe that the policy response to an economic malaise is highly inflationary. I see government deficits everywhere, even as I see it being more difficult to service those deficits with higher interest rates. I think the way around the political promises that have been made is to inflate away the net present value of the government's obligations, which is to say inflation. I saw it happen early in my career in the 70s, and I think I'm going to see it happen again. So I'm attracted both to precious metals and to precious metals equities, although some patience will be required. I'm attracted, too, to industrial materials, although I suspect that the next year will be challenging in the industrial materials market. I don't think a Chinese rebound has happened anywhere near as quickly as people would have preferred. And I think that you are seeing the delayed punch to the economy affected by higher interest rates, as well as caution in continental Europe as a consequence of war, and newly established caution around the disputes in Israel and Palestine. I believe longer term, however, that the market for industrial materials will return and will return in spades. I think that's true because I think we've underinvested in productive capacity for a very long time. And as world population growth continues, and as the material ascent of humankind continues, that the ability to produce that we currently have around several materials will be insufficient to meet current, let alone future demand. I continue too, Jesse, as I was in our last interview, to be particularly bullish around fossil fuels, oil, gas, coal, things like that. The big thinkers in the world, the Justin Trudeaus, the Joe Bidens, my favorite energy physicist, Greta Thunberg, people like that to tell you that the era of fossil fuels is over. I would note, Jesse, for your listeners, that humankind has now spent almost $5 trillion US in 40 years on alternative energies, and we've reduced the market share of fossil fuels from a high of 82% all the way down to 81%. $5 trillion has reduced fossil fuels market share by 1%. What does that mean? Oil and gas, stronger for longer. Coal, stronger for longer. Uranium, stronger for longer. Note, I'm not against alternative energies. I want to put them in their place. I'll add them to my portfolio when they're economic. But compared to, oil and gas and coal, the place in the sun will continue to be enjoyed, I think, by fossil fuels.
In the bid to move toward renewable and cleaner energy sources, fossil fuel sources like natural gas, oil, and coal have been repeatedly demonized over the past few years. It is, of course, important for the world to move toward cleaner energy sources, but until we can effectively do that, there's no use hypocritically turning away from fossil fuels in public while still being completely reliant on them in private. Such is the hypocrisy of most of the world's governments. According to Rick, it will take decades for the world to complete that transition, if the day ever comes. In the meantime, here are some ways Rick will be investing in oil, natural gas, and coal.
I'm more attracted, frankly, to the oil and gas business because it's a bigger business, it's a better business, and it's easier to play. In that context, the biggest and the best name of all is headed a little lower in the near term, which is to say ExxonMobil with their recently announced takeover of Pioneer. This will put pressure on the stock. I think for people who have a 3 to 5 year outlook, as I do, that's a wonderful opportunity. I'm not saying it won't continue to lower for the near term in the context of weaker economic conditions, but this is a premier deployer of capital, firing on all cylinders upstream, downstream, refining and marketing, everywhere. Other names that I think American investors might want to look at are American natural gas names. In particular, I would say Devon Energy, the big producer in the South and the West, and Equitable, the big producer in the Marcellus Shale. The dichotomy, the delta, if you will, between U.S. domestic natural gas prices and global energy prices is one that's going to be eaten up by liquefied natural gas, American liquefied natural gas, and those two names will be prime beneficiaries. Canadian oil and gas investors have an even broader menu to look at, with the caveat that the Prime Minister of Canada and the Laurentian elites hate the oil and gas business. The market, however, is bigger than they are. I don't think they realize that yet. So names for Canadians would include Arc Energy, Freehold Royalty, Prairie Sky Royalty, Peyto, Birchcliff, Tourmaline. There's just a plethora of names in Canada. Buying a basket of those names, if you are prepared to own them for 5 years, if you're prepared to stomach volatility, and if you are willing to subject yourself indirectly to the hatred of the Eastern Canadian press and the political hatred of the Laurentian elites, I think you'll do extraordinarily well in terms of capital gains and dividends, which might ease the pain of being unpopular.
How do you currently view the battery metal space? Is it mainly lithium that you're looking at there, or are there other metals you think present opportunity, nickel, cobalt, etc.?
I've personally moved on from lithium because I believe that markets work. The fact that lithium prices have quadrupled in 5 or 6 years brings a market response, and we're seeing a market response. We never had a shortage of elemental lithium. What we had was a bottleneck in capacity for lithium chemicals because lithium demand increased so quickly that the fabrication of the final products became a problem. We're seeing a circumstance now where we are debottlenecking existing supplies at the same time that we're increasing new supplies. And if, and I say if, not necessarily when, the oil and gas industry perfects a technology around extracting lithium from co-produced saltwater brines in oil and gas extraction, then the lithium business is swamped. Notice that I said if, not when. With regards to the furor around battery minerals generally, as you know, Jesse, I try to avoid furors. I'm attracted to electrification, not because Mr. Biden likes it or not because Mr. Trudeau likes it, but rather because 1 billion people on Earth currently have no access to electricity. And I think in the next 20 years, all of those billion people are going to have access to primary electricity, which means that the demand for all of the economies, all of the materials around the electric economies are going to increase. I don't think this is as much about electric vehicles as it is about the urbanization of people in India and Malawi and Indonesia. And I think that's all a good thing. I think distributed storage, which is to say the ability of people to generate electricity and store and use electricity independent of centralized grids, is an important theme too. And in order to do this, we are obviously going to have to access battery technology, whether or not Mr. Biden approves.
During the conversation with Commodity Culture, Rick gives his outlook on the United States and global economy. According to the legendary investor, the world is slowly beginning to see the delayed impact of higher interest rates. In addition, you have increasing political and social instability in Europe, the Middle East, and even here in the United States. Rick concludes by adding that none of these issues will be resolved soon, and investors must make appropriate changes to their portfolios to stay protected through it all. Of course, one way to do that is by investing in precious metals like gold and silver. Please share your thoughts on Rick Rule's interview. Are you making any changes to your portfolio? If so, what changes are you making and why are you making them? Please drop your comments and observations below. Also, ensure you like this video and subscribe to the channel for more videos like this. Thanks for watching.